AFCFTA concern over dumping mount as trade deficit widens. Telecoms banks agree on USSD charges. Nigeria AFDB setting up $500 million fund for tech creative sectors. Plus, Nigeria's market share in global trade is the focus of discussion on the program. This is Business Express reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Well, blurring the boundaries between physical, digital, and biological worlds is at the heart of the fourth industrial revolution and is shaping the way businesses are transacted globally. Lekatum Babatunde in this report examines how bookkeeping is metamorphosing in line with global best practices.
Little over a year ago, the fourth industrial revolution seemed a distant feat to conquer for many in Africa, but for the coming of coronavirus, the pandemic will change the way businesses and every other aspect of life is being conducted forever.
For me, it is a big plus for us because we're able to do multiple things. Things we would have done repeatedly manually, we are able to do repeated things faster with the use of aid of technology. So our productivity and output is even more with the impact of the pandemic. It has made us to go back to the drawing board to look for better and faster way to get results.
Lockdowns entrenched smarter business relations and erased physical transactional spaces. Experts say Nigeria must leverage on these to take optimal advantage of the fourth industrial revolution.
So many meetings are going concurrently, so many trainings, and self-training is enabled because of this technology, because you can just log on at your own time, even in the night, to do training, which was not possible before.
The fourth industrial revolution is ushering in solutions to challenges like low-quality education, climate change, vulnerability, and poor service delivery.
In the move to spur the entertainment, creative and technology sectors in the country, the Buhari administration has commenced a process that will provide the sectors with about 240 billion naira in financing and investments set to take off by the end of the year. The government says the $500 million equivalent financing, which is to be sourced from the AFDB, will be used for the establishment of a $500 million fund in support of what has been named the Nigeria Innovation Program. A report of the first draft project proposal was presented by the AFDB to Vice President Yemi Osinbajo last week. The AFDB is expected to give its approval in October. Confirming the meeting, Laulu Akande, a senior special assistant on media and publicity and the presidency, said details of how the facility will work were discussed on Thursday at a meeting presided over by the Vice President, which had in attendance cabinet ministers, representative of the African Development Bank, among others. Now, the International Air Transport Association has expressed worry over the trapping of $601 million airlines revenue blocked in 17 African countries since the onset of COVID-19 over a year ago. Block funds are owed to airlines that could not be repatriated to their country in routes they fly to, according to IATA's Regional Vice President, Africa and Middle East, Kamil Al-Wadi. The inability of these countries, Algeria, Angola, Benin, Burundi, Central African Republic, Eritrea, Ethiopia, Equatorial Guinea, Malawi, Mozambique, Nigeria, Sudan, Gabon, Cameroon, Chad, Congo and Zimbabwe to repatriate the large sum is creating unease for the carriers struggling for survival. The global regulator has therefore urged governments in Africa to take steps in escalating priorities in areas not limited to continued financial relief and release of committed aid and blocked funds, safe reopening of borders and planning for the safe restart of aviation business. Now, the World Trade Organization has projected that the volume of world merchandise trade is expected to increase by 8% in 2021. Adebola Brooksland Sunday reports that the Director General Ngozi Okonjo-Iweala made this known after the release of Trade Forecast report in Geneva.
In 2020, the world merchandise trade fell by 5.3% following the effect of coronavirus pandemic. According to the reports, the rebound is expected to gain momentum as merchandise trade expanded more rapidly than expected in the second half of last year. Ngozi Okonjo-Iweala said COVID-19 vaccines play a crucial role in economic recovery and called for equitable access to vaccines.
The rapid development of effective vaccines has given the world a realistic chance of stopping this disease in its tracks and jump-starting the world economy at the same time. But this opportunity could be squandered if large numbers of countries and people do not have equal access to vaccines. A rapid, global, and equitable vaccine rollout is the best stimulus plan we have for the strong and sustained economic recovery that we all need.
Now, the fears that Nigeria might become a dumping ground for manufactured goods, especially with advent of the African Continental Free Trade Area, AFCFTA, has heightened as Nigeria's trade in goods statistics show rising deficit in manufactured goods trade. Statistics from the MBS show that the value of manufactured goods trade in Q1 2020 was 3.106 trillion naira, with 444.5 billion naira and 2.661 trillion naira exports and imports components, showing a trade deficit of 1.217 trillion naira. I have joining me via telephone Dr. Ken Ukoha. He is the President, National Association of Nigerian Traders, to discuss the above figures amid the projected increase in world volume of trade merchandise of 8% in 2021. You're welcome to Business Express.
Thank you very much.
Okay, where is Nigeria in the global trade chart?
Well, I think if we're talking about Nigeria alone, we would be perhaps losing the gap. I think, therefore, it's important to look at a continental, paradigm. When the WTO released a report recently, giving the whole of Africa a negative 8.0 growth, which means that there is a rewind in terms of growth indices and other expectations. It causes, some shock, and some of the causes that they have also highlighted, and majorly looks at COVID as a major cause. Yes, it's quite very easy and simple to agree and admit that. But beyond COVID, when you now zero into Nigeria, you also look at issues of insecurity. You also look at issues about climate change. You also look at issues of, population increase, the growth in population, and then you also look at the other monster, which has to do with poor productivity, which links up with what you talked about, manufacturing indices. Now, having looked at all of these five trajectory indicators, you now begin to ask yourself the question as to the WTO that released these figures. What efforts have they been able to make? Let me show you something. In terms of what the WTO has been able to do, for the past few years, WTO has dedicated 16% of all the total global capacity building components to Africa. 16%. Now, if you look at capacity building, what is it all about? Is it capacity to produce? Absolutely not. Is it capacity to, export? Absolutely not. Now, this capacity building component is just like lectures on the rules of the game. And, look at trade facilitation and the rules on non-agricultural market assets, the rules on agreement on agriculture and all of that. And there are other things that have to do with this, have to add to this, which include technical assistance, aid for trade initiative, support for the implementation of trade facilitation agreement. Okay. These are all good. But in my opinion, I am thinking that the WTO should also come back to look at development.
Okay, it is said that Nigeria's success in the AFCFTA depends on trade facilitation and ease of doing business, production and service capacity growth, power and trade, logistics, infrastructure, market access, skills and human capacity development, and quality infrastructures, of course. This is a whole lot. How can this be achieved?
Now, how we're going to achieve this, and this is where I was heading to, is, first of all, to look inwards and reduce importation, import dependence. That's number one. If you do that, what you're doing absolutely is to increase your export dynamics, is to increase your domestic production. Then if that happens, what you also do, like for instance, in rice today, in 2017, Nigeria was producing about 3.7 million metric tons of rice in 2017. Now, 2 years after, 2019, Nigeria moved to about 8 million metric tons of rice, becoming the 14th in the world. That shows the level of investment in that particular subsector called rice. Now, if you take that, apart from what is happening right now, where insecurity is preventing farmers from moving into the field, with government support in other sectors, you will find out that we cannot be, we cannot be going into a negative trajectory, negative kind of growth. We will be coming out. That is just one product. Today, you find out that the global, production of rice is 487 million metric tons globally. Asia produces about 89%, China 30%, India 23%. And then if you look at today, we are in Africa. Nigeria has stepped up to become the largest producer. With about Nigeria alone having about 55% of the total production in the whole of Africa. What this shows is that this is possible in other sectors, other commodities, even in the manufacturing sector. If we can invest in them, what CBN is doing in agriculture can be replicated in other sectors. Two, the issues on trade infrastructure should be maintained. The rails, the roads, and these are very key, very monumental. But again, it is important for us to look at what happens at the ports. Look at the congestions. Very, very terrible. Look at the road that leads us to the markets, to West African region. Very, very terrible. And you cannot do it with that kind of structure, that kind of infrastructure. We need to invest in these areas.
Okay, now with the AFCFTA in place, what is Nigeria's market share?
Nigeria's market share, of course, the AFCFTA has just taken off 1st of January 2021. And there is no statistics, nobody can come now to tell you that this is statistics that is on ground for AFCFTA now. We need not to be deceived. I have seen people bandying figures and all that. It's not possible. This is an agreement that has just started its implementation. And don't forget that the major part of the instruments are under negotiations as we speak. In fact, the rules of origin is being negotiated. Services have not even started. The intellectual property rights, all of the other components in terms of competition, investment, and all of it, they have not really started in terms of negotiations. Therefore, it is not possible to get those figures now. However, what we are doing right now is to put the house in order, making sure that we be able to identify which of the commodities, which of the products are going to be key for exports, so that we can as well put put the other side of facilitating the goods in terms of exporting them seamlessly. This is where the key is. Seamless export can help us. And then the manufacturers can also derive a lot of benefits if the Nigerian government can assist in investing more funds in terms of capacity, in terms of technical assistance, in terms of research and development. This is very important. Therefore, we should also add standards to that will help us to move out of where we are. Thank you.
Okay, it seems Nigerian industries are handicapped to match the onslaught of foreign imports. What initiatives are needed to boost local productivity? What initiative do you think are needed to boost local productivity?
The initiatives, I just mentioned one, which is the issue of research and development. If we can be able to invest more funds in research, that would bring a lot of innovations in our product lines, multiplicity of product lines that can knock off, and then compete favorably at the international market. But on one other hand is the fact that the CBN and other bodies must also not concentrate on agriculture alone. The transformation of raw materials to processing belongs to the manufacturing sector, industrial sector. If we must industrialize, one is the policy side of it, the second is the approach, which is the practice. We need, therefore, funding for new mechanics, new technologies that can come in, therefore, so that we can be able to balance down and now throw in new products on the shelves for export.
Okay, where's the place of effective monitoring to ensure compliance by all countries on the rule of origin that has been agreed upon in the AFCFTA?
The rules of origin have not been completely been agreed upon, but then learning from what we have at the regional economic communities, like ECOWAS, for instance, under the ECOWAS Trade Liberation Scheme, there are some lessons, very important lessons that we need to learn. Take, for instance, a situation where country A, within the 50 member countries of ECOWAS, can go out to China, import, and then come back here and change the label. And, you begin to think or claim that this product originates from their own country. And then they now want to sell those products under the ETLS without duty.
Commodities.
Under duty-free, which is very terrible. And this is exactly one of the things that we must guide against under the AFCFTA. Nigeria must open her eyes because the biggest market size is Nigeria. And therefore, everybody wants to come in, including those from outside Africa. We want to use third countries to import into Nigeria. Export into Nigeria. And therefore, we need not to keep our eyes closed. We need to open our eyes in the negotiations of the
Dr. Ken,
origin and every other thing. Thank you.
Okay, thank you very much, Dr. Ken Okoha, President, National Association of Nigerian Traders.
You're welcome.
Thank you. Now, moving on, let's take a trip to the commodity market. Now, the federal government of Nigeria has urged state governments to domesticate the national chart of accountant to qualify for performance-based grants under the State's Fiscal Transparency, Accountability and Sustainability Program. The SFTAS program is a $1.5 billion federal government program for results supported by the World Trade, which which aims to strengthen fiscal governance at the state level. The National Program Coordinator, Stephen Okon, explained that the NCOA provides a standard template approved by the Federation Account Allocation Committee to be domesticated by all levels of government for the purpose of planning, budgeting, accounting, and reporting of their financial transactions. Upon full adoption, citizens will be able to track across all states budget line items by ministries, departments, and agencies, economic transaction, fund type, function, program, and location. Now to stocks, talking. The equities market ended the first quarter 2021 on a bearish note, with investors losing 628 billion naira following inflationary concerns and uptick in fixed income yields, among other market factors. After starting the year on a positive note, the equities market made a total reverse in February and sustained the mood to the end of March. Though the level of losses was much lower in March, the 2 months of consecutive losses resulted in a negative return at the end of the quarter. Consequently, the benchmark all-share index fell by 3.04% to settle at 39,045.13 points from 40,270.72 points at the beginning of the year. Similarly, the market capitalization of all listed equities closed lower at 20.428 trillion naira from 21.056 trillion naira at the beginning of the year, representing 2.98% decline. Already, the market has started the month of April on a negative note, with the index recording a negative return of 0.29%. Financial analysts are also projecting that the market will end the second quarter on a bearish note. Still talking stocks, profit taking depresses all-share index further by 0.76% shortly before Easter holiday. NTA has more on happenings in the week ended.
The market opened for 4 trading days last week as the federal government of Nigeria declared Friday 2nd and Monday 5th public holidays to commemorate the 2021 Easter celebration. A total turnover of 1.4 billion shares worth 19 billion naira in 17,400 deals were traded last week by investors on the floor of the exchange. The NSE All-Share Index depreciated by 0.76% to close the week at 38,916.74, with market capitalization also dropping to 20.3 trillion naira. All other indices finished lower with the exception of NSE Main Board, NSE Pension, NSE Insurance, NSE Afri-Div Yield, NSE Mary Value, and NSE Consumer Goods Index, which appreciated, while the NSE SM Index closed flat. Financial services industry led the activity chart with 1 billion shares valued at 18.3 billion naira traded in 9,179 deals. The conglomerates industry followed with 131.1 million shares worth 578.3 million naira in 811 deals, while the third place was consumer goods industry. Trading in the top 3 equities were Guaranty Trust Bank, Union Bank of Nigeria, and Wema Bank. They mutually accounted for 670.3 million shares worth 10.3 billion naira in 1,990 deals. A total of 108,271 units of exchange-traded products (ETPs) valued at 445.2 million naira were traded last week in 16 deals, as well as 50,358 units of federal government bonds valued at 55.2 million naira. 42 equities appreciated in price during the week, 22 equities depreciated in price, while 98 equities remained unchanged. Neka Oku, Business Express.
Well, that's it. Business Express returns tomorrow. I am Musa Abubakar.